Hi, thanks for landing on our page. We prepared this quick question and answer for reverse mortgages. Some of this may seem redundant, but my goal was to oversimplify some of the best uses for reverse mortgage that many people are not aware of. So let me thank Omar for being here and enjoy the video. Thank you.
So Sam, one of the first questions that I have for you is, can someone lose their home on a reverse mortgage?
Very good question, Omar, and I think that's one of the biggest misconceptions or stigmas that someone can lose their house. The only way someone can lose their house in a reverse mortgage is if they do not pay the taxes and insurance. Many times a reverse mortgage, if the reverse mortgage person elects to, can have it automatically dispersed from the funds, which is not a bad idea. But even then, if you decide to pay it on your own, but that's the only way. So you cannot outlive a reverse mortgage. You can live to be, if you choose the 10-year option, which is a payment for the rest of your life, you can live to be 120 and you will not lose your home. So the only way you lose it is taxes and insurance.
Wow, perfect. So Sam, one of my other questions for you is, could somebody who is inheriting a property with a reverse mortgage lose their home or lose their property?
I think what you mean, Omar, is can a family lose its inheritance?
Right.
If a family member, if one of their loved ones has a reverse mortgage.
Right.
And no, the answer is no. You still have access to all that equity. All that all it really did was ease typically the life of that individual. The way a reverse mortgage works is after the individual passes, whatever equity is left, the family can either elect to refinance it and keep the home for whatever amount is, and or sell it, and any equity that's left obviously is theirs. They inherit that. Many times it's a substantial amount close to whatever it began at. So that's another common myth that the family's going to lose out on their inheritance. Absolutely not. They typically are in great position with the reverse after that individual passed in any given stage. So
perfect. Sam, if the market crashes, could a reverse mortgage be at a loss?
So you're asking me if the market depreciates, can an individual who did a reverse be at a loss?
Right.
It's actually the opposite of that. It's actually protecting an individual from that. Any equity credit that was locked in at the conception of the reverse is locked.
Okay.
Not only that, it's going to increase. That equity, the non-use of equity, is going to increase at whatever interest rate was agreed upon when they began the reverse mortgage. So you see, it's literally the opposite. You're growing your equity, your protection of what you have access to, even in a depreciating market.
Wow, that's pretty good. I didn't know that. So you're saying that a reverse mortgage can be utilized as a risk management tool?
Yes, exactly. Like I said, I don't want to sound redundant, but it's exactly what a reverse mortgage can be used for, as a risk management tool to protect your real estate assets.
Okay.
Yeah. So
wow.
That's definitely
a big one.
Yeah, exactly. And people don't look at it that way. A lot of times, if people are in dire straits, they're not looking at that. They're looking at a way to either get cash out to help them or avoid having a payment. But just to protect it, especially in a depreciating market in some parts of the United States where the market aren't as robust and there may be some depreciation, this shells you from that. So.
Wow. Okay. So Sam, you've been working the reverse mortgage deals for a while already. So what is the standard typical cost on a reverse mortgage?
A good question. It's typically 2 to 4%. The total reverse mortgage is going to be is the associated cost. But I typically like to make the comparison to my clients that might seem high, expensive, but when you compare it to a life insurance policy or with a rider for long-term care, where the life insurance policy you have to pay that premium for the rest of your life, that typically far exceeds the one-time premium you pay for a reverse mortgage that gives you a lifetime of coverage. So you can see that there's a big difference there. It's typically someone who comes from a finance background who can make that difference and make that comparison. But that's why so there's a cost, and it's typically a stigma. It's going to cost a lot, but compared to any long-term care premium or a life insurance policy with a rider for long-term care, it's not in the same league. Reverse mortgages is far more beneficial.
Perfect. Thank you so much. Wow, that was great information. So what happens to a reverse mortgage in a rising market?
A good question. Well, it's in either case, it's already been established that your equity is protected. But in this case, it's almost a better case for the inheritors. You know, typically if the equity is increasing, then basically the people who inherit the what's left of the situation have far more equity, and they're capitalizing on the situation. Another good reason why it kind of debunks the position that people think they're going to lose their inheritance. Right. In a rising market, typically in California, to say this is really common, your equity typically far outperforms someone who's taking payments out at on a monthly basis of, let's just say, $800 a month. The equity many times will outgrow that, so they're going to be in a better position when the time comes than when they began. For the people who are inheriting the house, I hope that makes sense.
Yeah.
But yeah, that's another reason in the rising market why the people who are inheriting it are still in good standing. So.
Okay. Perfect. So Sam, the reverse mortgage basically information that you've given me is very valuable, and I hope all your viewers that are listening to this find it as valuable as I have. But just one of the few other questions that I have is, can the reverse mortgage be used for home care?
For home care, yes, a very good question. If a loved one is in the need of home care, sometimes the being able to fund the home care is pretty expensive.
Right.
A reverse mortgage is typically one of the best options to offset that expense. So it's not a burden on a family. You know, absolutely. So it's one of the best uses for a reverse mortgage is to fund the in-home care for a loved one who needs it.
Perfect. So Sam, would you recommend doing a reverse mortgage loan sooner than later?
Really good question. And this is another thing that's overlooked many times by financial planners who aren't aware of the full ability of a reverse mortgage. I get people who just hit 62 and are at reverse mortgage age, and they say, "Oh, well, I'm going to get one in 10 years. I'm going to wait for 10 years, right?" And what it is if you take a reverse mortgage when you're 62 and that equity that you have there, if you do not touch it and you let it grow, when you hit 72, the amount that it has grown is going to far exceed what you'll have to you had you waited at 72 to take the reverse mortgage at that time. So that's a big reason, and a lot of individuals are not aware of this, do not know this. But of course, if you plan on ever utilizing it and you have it at your fingertips, if you take a reverse mortgage and you never end up using it, let's just say you let the equity just be there and you never touched it, well, your family still has 110% of its inheritance, but it was just a nice soft pillow to lessen any type of a difficulty. And also, let me add to that, that's another reason why many people who don't have to be in dire straits. Another misconception is reverse mortgages may be for somebody who is trying to avoid their monthly payment. or really needs it because they need in-home care, no, you can see how it can be used as an excellent investment tool for your future to ease your golden years, basically. So.
Wow, that's great. So Sam, as I was asking you before on the reverse mortgage deal, so basically a lot of times I get asked questions from my clients specifically, and they ask me, hey, so can a reverse mortgage be converted, or a regular loan be converted from a regular loan, FHA, VA, or conventional, into a reverse mortgage? And that's the question.
Good question. And many times clients aren't aware of this, but first off, yes, absolutely. You can convert a traditional mortgage into a reverse mortgage if you're of age, of course, and if you have the equity. Okay, so those two things, age and equity, and typically it makes far more financial sense. Why not eliminate having a payment and let your money work for itself? Because the equity you have at that point is on. If it's untouched, it will grow. It will grow. And if you look at letting that equity grow for the 10 years that you had remaining on your traditional mortgage, you're going to be in far better position than had you waited the 10 years and decided to do the reverse mortgage once again at that point. Once again, this sounds redundant, but it's my goal to just repeat and expand on given scenarios. And it's just somebody who's done this a lot, and I don't mind explaining. As you guys watch this, you might have questions or answers. Go ahead and ask. So.
Perfect. So basically, anybody who has a conventional loan can convert it into a reverse mortgage.
If they're of age and they have the equity, yes.
Perfect. Thank you. So Sam, how about the reverse mortgage? How can that be utilized to manage your taxes?
Well, it can be a good question. This is a perfect example of someone who can utilize a reverse mortgage, who is not in dire straits. This can be the exact opposite. Someone who's trying to manage maximizing their assets and protecting themselves from tax liability. And the sad part is many financial planners are not aware of this, of use or ability of it. Let me give an example. Let's say someone has $2 million in stocks. I've seen it before. Some of my clients have been in this situation. Okay. And they're contemplating, they need work done or they need cash out, and they're contemplating withdrawing from their stocks. And inevitably, you're going to have to pay taxes on that, capital gains on that, right? Well, here's the thing: their home is owned outright. So if you take the funds from your in a reverse mortgage, that's tax free. That's tax free. So there is no, you take the $50,000, $60,000, $100,000 from, if it's available in the equity of your home in a reverse mortgage, that's tax free funds. That, a couple things, that leaves the assets still in their stocks. So should the time come when they pass away and the family inherits those assets, those stocks, that's an inheritance. Anything below $3 million is considered tax free, and that was a far better way where they were able to protect the overall assets from tax liability, and they were able to utilize the equity in their home in a reverse mortgage. So, and that's one of the biggest, most popular reasons. I can't stress that enough. People don't know this. Large part of the people don't know the full use and capability of a reverse mortgage, but that's an awesome tool to tap into resources you have and avoid, and of course, consult your CPA. Have them call me. I'll talk them through it, and let him double check that. I'm not a tax professional. I've just done this for a while, but I'll always consult with a tax professional. I'm here to help.
Wow, that's fantastic, man. Wow. So Sam, how difficult is it for somebody who wants to consider or is contemplating the idea of a reverse mortgage?
Good question. Compared to a traditional loan, a reverse mortgage is far quicker and easier, assuming whoever you're dealing with has done it before. The qualifying process and completing process is far quicker and easier. It's pretty straightforward. It's nowhere near the documentation necessary for a traditional loan. It's more of just confirming and verifying.
Wow, that's beautiful. So Sam, we've been talking all along about the reverse mortgage loans, basically, the reverse mortgage process, right? But a lot of people will definitely benefit from it, and a lot of people is not even aware of it. Why is it that this is not well known out there in the market?
Good question, Omar. And typically financial planners are the people who are coaching the most for retirement plans and managing assets.
Okay.
And this is just to answer that. Many financial planners are not aware of the ability of how you can use reverse mortgage to capitalize on any given position that they're trying to do. I myself come from a financial planning insurance background, so I was able to recognize this when I got into mortgages and able to help people. But because of that, the people who typically are helping people, just don't know it. And so it's a matter of getting the word out, educating people, removing the stigma. I've covered a few points where you can see how you can totally protect your assets in many ways and really benefit your overall situation. So,
wow. Beautiful.
Also worth mentioning and very important, one of the key utilizations underused a whole lot regarding reverse mortgages is a reverse purchase. If you have a family member over the age of 62 and they're planning on buying a property outright cash, which is pretty common, well, look at it this way: they'll literally have double the buying power and will not have to make a payment. It's that simple. Let me give you an example. Let's say I have $200,000. I'm a 62-year-old person and I want to buy a house for $200,000 cash. That's what I have. Well, you would buy that house cash, and obviously no payment, which is nice. Great, you own the property. But now let's say if you were to use a reverse mortgage in that same scenario, you would use that $200,000 cash and you would qualify for a $400,000 purchase reverse mortgage and still not have a payment. If you elected to make a small payment from then on, then great, you would have equity that's growing every time you make a small payment. But if you just want to leave it as it was and your property depreciated, appreciated, it doesn't affect you. So if used properly, the ability or the power of a reverse purchase can be a world of a difference. The difference between the type of home you'll get for a $200,000 price and a $400,000 price, or $300,000 to $600,000, you know what I mean. It literally doubles your buying power if you plan on buying cash and you're over the age of 62. There's going to probably be a lot of questions regarding this. Hugely overlooked, underutilized tool. Give me a call on this. Hey, thanks for tuning in. We covered a lot of different uses. If you have any questions, feel free to prompt in. You can enter information there on that screen, or feel free to call the number that's provided there. Any questions, to set up an appointment, we're really easy to get a hold of. Don't hesitate. Appreciate your time, and we look forward to seeing you.
Have a good day.